Can everyone hear me?
Yes, we can hear you, Jalna.
Good morning, ladies and gentlemen. Thank you for logging into today's webinar. We will start in 10 minutes. Thank you. If I could ask the panelists to do a quick sound check, please.
Hi, good morning. This is Delta.
Thank you, Delma.
Hi, Oliver, can you hear me? Is it good?
Yeah, thank you, Ahmed.
Good morning, this is Sakina.
Good morning, ladies and gentlemen. Thank you for logging in to today's webinar. We'll just wait another few minutes. We're seeing a lot of people enter the webinar right now. We'll give a chance for those attendees to join, and then we'll start the webinar. Thank you. Good morning, ladies and gentlemen. Thank you for joining the today's webinar on economic substance regulation. Just to run through briefly the agenda for today, I will give a very brief overview of NBG Corporate Services. We'll be followed by two speakers who are experts in the field of economic substance from the legal team, and then we will have a panel discussion for Q&A at the end. Throughout this webinar, if you do have questions, please send them across to us in the question and answer section on the webinar. We will answer them at the end. We will try and answer everyone we can. If we can't answer them within time parameters, we will get back to you each individually. NBG Corporate Services as a firm was established in 2002. We now have 16 offices across 6 locations, and we service the European, Middle East and Asian markets. We have over 3,000 clients globally, and we're very proud to represent over 100 Fortune 500 companies. Across all of our offices, we have over 150 staff, all of whom are fully employed by NBG Corporate Services. As an organisation, we have a huge amount to offer in terms of the service portfolio. We'll run through a few of these, and they'll be touched upon in the presentation also. Audit and assurance, taxation and risk advisory, mergers and acquisition, legal advisory, strategy and transformation. The economic substance is represented today by the legal team. In light of the recent events, we also have adjusted our response to the market and introduce new services that are specific for the COVID-19 pandemic. As an organisation, we have all the affiliations which you would expect of a firm of our size and reach. From a government perspective, we work with the Federal Tax Authority on the Abu Dhabi National Oil Company for the unified ICV, along with all the relevant departments. Also have strategic engagements with the main free zones across the UAE. From an empanelment point of view, we're empaneled with all the main banks from an audit that you would expect. Partner network ranges from accreditations and associations through to exclusive partnerships for tax, technology and legal. We also work very closely with the trade chambers and trade bodies. We provide webinars and seminars to all of the members, giving our feedback on the market and also taking their feedback on the current events to ensure that we are always up to date with the latest news and developments. Without further ado, I'd like to introduce our first speaker, Delna Palia, who is the manager within MBG Corporate Services for the legal department. Delna has worked and represented clients across many industries and has a very wide experience when it comes to economic substance and the legal department. Delna, I will hand over to you.
Thank you, Oliver. Good morning, everybody. My name is Delna Palia, and as you know, I'm working at MBG, and I will run you through economic substance. Oliver, next slide, please. So the way that economic substance got formulated into UAE is because UAE was previously put in the same list by the European Union as BVI, Cayman Island, and all those jurisdictions. And that was not looking very good for us. We were in a blacklist by the European Union. So therefore, we wanted to not be portrayed in such an image. And we wanted the perception of the world to be that we have high reporting standards. And therefore, what we did is that as per the European Union Code of Conduct Group on Business Taxation, BAPS, we went forward with the OECD guidelines and put forward the economic substance regulation. Next slide, please. So economic substance at a glance, what is the main key objective? Why did this law come here? What is the purpose of it? What is it meant to improve for UAE? It's meant to improve business transparency and curb profit shifting. What does that mean? That basically means that if you are trying to, try to do business in a specific tax jurisdiction, which would be in order to sort of, not put the tax where it is meant to be, and the objective of economic substance is to ensure that companies' core income generated activities are actually performed in their respective jurisdiction. And also another very good benefit is that any kind of dual taxation is now avoided because of this. And the benefit of the double tax treaties, which are signed between various countries and UAE, the UAE can get the companies registered in UAE can get the benefit of all of these tax treaties and not pay a double tax. And now the question is, who does it apply to? So it applies to any kind of company registered in the mainland, the free zone. When I say that, I mean a branch office, a rep office, an LLC, all companies which are registered in UAE, save those which are owned either completely or 51% by government or semi-government, of course. Oliver, next slide, please. So now we'll go to which companies and what exact activities fall under ESR. So if I'm doing any of the activities, which I'm going to talk about in a bit of detail, then I would be eligible for ESR. So the first one I'd like to go to is the headquarter business. So in the headquarter business, what we have is that if there is a company which is acting as a headquarter, it is taking all the management decisions, it is coordinating between the group, it is paying for the expenses of the group entity, the management is deciding for the rest of the group entity, then it would be considered as headquarter. We have many companies which have a registered headquarter in UAE, and then they have different entities throughout the MENA region, throughout Africa, Oman, KSA. So then the headquarter business would be falling under this category for such companies. Next one, holding company business. In that, if there is any kind of company that holds shares or assets in other companies, and from those shares and assets, maybe it's earning a dividend, a capital gain, but it is not doing any other commercial activity other than holding, then it falls under holding company business. Next, most interesting and most definitely the most predominant one that we find most often for all companies is distribution and service center business. Now, this one is very interesting. It has to be broken up into two categories. I'll first explain about distribution. In distribution, how it works is that if there is a foreign connected person, for that meaning, we mean that a company registered outside UAE, maybe a headquarter, a sister company, and that is your foreign connected person for the company registered in UAE. And between the sister company or the headquarter, being the foreign connected person, if there is any importing and storing of the goods into UAE, and then those goods are then shipped outside UAE to customers in, say, for example, Oman, KSA, then it is directly falling under distribution. Next, service center business. For this, if you're doing any kind of service on behalf of your foreign connected person for their customers, maybe their customer is located in Oman and they have signed a contract with them, and then the headquarter has asked you to execute that contract because you're geographically placed better to Oman, and you are executing that service on behalf of your foreign connected person, then that would fall under service. So basically, if you are also doing any kind of storing, management inventory, order taking, pre-order stage, indenting, any kind of admin service even for your other entities of your group which are located outside UAE, that will be considered as service. Next category would be banking. Banking is pretty straightforward. It's any institution that is providing any kind of loans, any kind of money in form of credit. You have your forex, you have your raising of your funds, you have any kind of preparation of any banking regulation associated activities. Next is the insurance business. Insurance business is pretty cut and dry and straightforward. It involves any kind of insuring, reinsuring, underwriting of even the insurance or reinsurance, preparing any kind of report and functions in relation to the insurance business, because sometimes we have companies that then have other companies which are insurance, and those are synced and linked. So both would be considered. And then there has the risk calculation as well in insurance business. Oliver, can you please take the next slide? The next category is investment fund management. So any kind of making or taking of decisions on holding back or selling of investment, calculating risks and reserves, decision on risk coverage, hedging options, preparing any reports, any kind of investment fund management, okay, that will be under this category. Next one is the lease finance business. Under that, any kind of taking of loans, any kind of loaning of assets, when you are giving those loans and you're receiving any kind of income or generating any income generating activity out of leasing those assets to your sister concern or etc., then that will fall under lease finance. Next, we have the shipping business. In the shipping business, we have any kind of vessels being operated, any kind of rental of a charter of a ship, sale of tickets to customers of a ship, any use, maintenance, rental of container, or even management of a crew of the ship. And even, maybe you are doing some kind of in the trailers or other vehicle, any equipment of transport on containers used for transport of anything by sea, all that may be concluded as shipping business. However, in shipping business, if the yacht or the vehicle, the ship, is moving only within the territorial waters of UAE, then it cannot be considered as shipping business. It will not fall under the purview of ESR of shipping business. So if you have, maybe a vessel used for fishing that is very small, or even a luxury cruise or a yacht, which is only, operating within the territorial waters of UAE, then it will not be considered as shipping business. Last but definitely not least is the IP business and the high risk IP business. So when we talk about that, what we would potentially be talking about is any kind of holding, exploiting, receiving of income of intellectual property asset. That will be anything from a copyright, a trademark, technical know-how, brand patent, any of these kind of items. So if you are receiving any kind of income as your core income generating activity, in the form of royalty, in the form of license fee, franchise fee, capital gains, and any other income from sale or exploitation of the intellectual asset, then in that case, you will fall under IP business. However, a lot of companies do have trademarks and patents which they have registered as per their company, but they don't earn anything from them. It is just something they do as big multinationals to protect their rights. In that case, it will not fall. It will only fall if you are earning an income generating it is the income generating activity. Okay, so I think with this I will conclude with the categories. Oliver, next slide, please. And we can introduce Sakina now.
Yeah, thank you very much, Delna. So our next speaker, ladies and gentlemen, is the Associate Director of our Legal Services. Sakina has worked in the field of corporate and commercial laws across many industries and been in the region since 2014. Sakina, over to you for your insights.
Yes, thanks, Oliver, and very good morning to all of you. Let's just discuss about the testing parameters which are being given under the Economic Substance Regulation. Next slide, Oliver. So one of the testing parameters is place of activity. So when any business is identified as that they are conducting the relevant activity, then the next phase comes, which is the compliance with the testing parameters being given under the Economic Substance Regulation. Under this, they need to ensure that core income generating activities are being taking place within the UAE itself. Then comes the place of management. Now, how the companies can ensure that the activities are being performed and adequately being managed within the UAE. So with this respect, licensees, the board of directors can meet in the UAE with an adequate frequency, because a license, in addition to this Economic Substance Regulation, is also being governed by commercial regulations as well as the free zone regulations wherever they have the presence. So they need to ensure that what is being mandated under the free zone or the commercial regulation, the board should meet frequently and the decisions being taken within the UAE, and they need to comply with this testing parameters. Then one of the requirement is to have a qualified full-time employees resource present in UAE within their company, so that the operations are being carried out with respect to that qualified employees and this substance requirement being met. Then one of the requirement is to have the adequate operating expenditures to be incurred within the UAE. Also, the licensees needs to ensure that physical assets are being maintained adequately within the UAE itself. there could be a case that some of the activities are being outsourced, like even they could be using some employees from an outsourced agency. There could be some functions such as HR function, accounting function, legal function, any function being outsourced. So what a licensee needs to take care is that they have complete control over the outsourced activities if any of the functions are being outsourced. Next slide, please. Now let's discuss about the economic substance requirement with respect to testing parameters for holding company. Now there is a reduced substance requirements for a holding company. So it requires the compliance to be done by the holding companies, which is there as per the local regulations and the local requirements under the laws where they have the establishment like free zone or in the mainland. Then holding companies must be having the qualified full-time employees present within the UAE. A holding company must also be having the physical assets to perform the activities, and they don't need to show the place of management, which requires that the activities should be adequately managed and directed from the UAE, and they don't need to show the expenses, operating expenses to be incurred within the UAE. So this liberty has been given to the holding company businesses that they just need to comply with the reduced substance requirement. Next slide. Now there is a increased substance requirement for high-risk IP business. So in addition to the normal substance requirement that we have already covered in the previous slides, high-risk IP business needs to also have, increased substance requirement. Now let's see how they need to have. One is the control over developing intellectual property assets. They should be having a high degree control. Employees resource must be present within the UAE. Licensees must show a business plan for having a reasons of holding that intellectual property within the UAE. And also the decisions making continue to happen in the UAE. The board should meet in the UAE. The decisions should be taken. Now also I want to add on the decision making, that how a company can show that decision making is happening within the UAE. They can comply with the requirement that the boards are meeting, board meetings are taking place, decisions are being taken, plus the companies can also record the minutes of the meetings and also circulate with among the directors and shareholders as required. And also with respect to the decisions, in case there is only a manager being present, because let's take example of the branch offices where there is only a manager being present within the UAE. So that manager is required to be present in the UAE while taking the decisions. Board of directors will come into the picture when there are companies and there a board is existing within the companies. Next slide, Oliver. Now let's discuss about some of the compliance requirements that the licensee needs to do when they are conducting the relevant activity. Firstly, the notification needs to be filed with the relevant authority, stating that what kind of relevant activities a licensee is conducting. Because as we have seen, there are 9 activities predominantly which are being mentioned in the regulation. The licensee needs to clearly identify and also report to the authority which activity they are conducting. There's a deadline for filing the notification for the previous year as of now, which is broadly being given as a 30th June. However, there are free zones which have also come up with their own deadlines, which is before 30th June. Like for example, DDA, Dubai Development Authority, under which TCOM Group free zone comes. And for them, the deadline is 25th June. Also, there was a deadline which was been upcoming by DIFC and they have extended it up to the 30th June. So broadly, in a nutshell, maximum 30th June, all the filings needs to be done with the authority. What is the next step? Then the next step is there will be a report that needs to be filed within the 12 months of the end of the fiscal year. And also during the year, the companies who are conducting the relevant activity needs to needs to do a compliance with the testing parameters. And thereafter, a report shall be filed with the authority. So this is all about the compliance requirement. Oliver, next slide. Let's see what will be the non-compliance penalty if any licensee fails to meet with the economic substance test or fails to provide the accurate information to the relevant authority. If there is a first-time failure, then there is a penalty being given between 10,000 to 50,000. Then if there is a subsequent failure, then there's a penalty of minimum 50,000 AD to 300,000. And in case there is a failure in providing inaccurate information or wrong information to the relevant authority, then there could be a penalty between 10,000 to 50,000. Now, how this can be imposed? Like, for example, if a company is conducting a relevant activity and it does not notify it all to the government, or maybe it notifies in some, other activity being conducting some different activity, then it could term as a disclosing an inaccurate information, and there could be a levy of the penalties on that. Also, in addition to penalties, there could be more higher implication, which includes the exchange of information with the parent company, and also there could be seizure of license also, and there could be a seizure of license of the parent company or ultimate beneficial owner of the companies. Next slide, Oliver. We have prepared some of the case studies for some of the relevant activities. Let's start with the distribution and service center business. So in this case, there is a company A which is engaged in the business of sale and purchase of fruit products. Now, how the company is conducting the businesses, it is making a purchase from one of the FCP located outside UAE and selling the goods to another FCP located out the UAE. However, the goods are not being imported. Now, because in the distribution and service center definition, we saw that the goods needs to be imported. But in this case, the conclusion, if we ask our question that whether this company should be termed as conducting the distribution and service center business or not, then the answer is yes, because being present in the country, what this company A is doing, it is acting as a mediator, as an agent between two entities. And billing one entity, purchasing from another entity, then it will automatically come under the purview of the regulation. And because this is a kind of intergroup transaction. Next case study, Oliver. Here we have covered some case study with respect to intellectual property business. In this case, there is a company X which is holding a trademark which is being taken from its parent company, and it is using the trademark for generating its income from selling of goods. Now, will this be termed as coming under the intellectual property business or not? The answer is no, because it is not exploiting or earning any identifiable income from the intellectual property business. So this company X cannot be termed as conducting intellectual property business. However, it might be termed as conducting distribution or service center business if it's falling under the parameters of that business, but it will not be termed as conducting intellectual property business per se. Next case study. This case study is with respect to the lease finance business. Now, what is happening in this case is there is a company Y which is selling some spare parts to its regular customers. It has a term in its arrangement that it's giving 30 days credit terms to make the payment to the customers. Now, by virtue of giving this 30 days, also there is a condition that in case there is a delay, it will charge interest on delay payments. So now, will this be termed as coming under the lease finance business? The answer is no, because it is just giving a credit to its customers and just charging a penalty for delay in making the payments. However, this is not the main business of the company to get engaged in the lease finance business. So it will not be termed as conducting the lease finance business. Next slide. So herein we have covered the scope of work, that how we can support the companies. Our scope is being divided into two phases. First is the phase 1, which is being currently performed because the company is being the deadline of filing the notification form with the relevant authority. So we first do the assessment, we identify whether the company is conducting the relevant activity or not, and then we are issuing off with a report, and accordingly we are advising the companies to notify the authorities. Then is the advising on the remedial action plan to meet the economic substance test parameters that we have covered, and also we assist in preparation and submission of the report to the relevant authorities. So this is in a nutshell the scope of work that is being performed by us. On this note, I would like to thank all of you for attending. I hope the presentation and the content was useful and informative for all of you, and looking forward to answer your questions in the quick Q&A session. Over to you, Oliver.
Thank you for your insight to Sakina and Delna. I'd now like to introduce one of the members who will be on the panel, Mr. Amit Mehta, who has a very wide experience with tax division and also an expert in economic substance. So I will open up the discussion now to address some of the questions which have come through. Needless to say, this is an area which has generated lots of questions. If we can't answer your questions specifically or don't have time, we will certainly, as I said, get back to you. But I'll try and take out some of the questions which we've received, which will appeal to the audience, and then move forward. Just one moment, please.
Thank you, Oliver, for introducing me. And very good morning, everyone. Thank you, Delna and Sakina, for presenting this regulation. So we all are happy to answer your all questions to the extent possible. So Oliver,
so if I'll just start out with some of the questions. One question regarding distribution business activity. How is the precise definition of a foreign connected person in terms of these activities?
From precise concepts, I would say the foreign connected person can be, one can check from the two aspects. One is ownership aspect, second is management control aspect. So from ownership aspects, we need to check the percentage of shareholding, beneficial shareholding. If we have, then it will be termed as foreign connected person. And second is from the control aspects, one need to check what the management control one is having in another entity. So even the regulation asks for two aspects, that is one is ownership, second is management aspect, management control aspect.
Thank you. Could you please detail what you mean by high risk IP business?
Yeah, in high risk IP business, firstly, I'll tell you what is IP asset businesses. Basically, if any entity is earning a consideration from the intangible assets, like I would say trademark, copyright, any license, any special assets, intangible assets they have, and if they are earning any income out of it, then that means they must be doing IP assets business. Now comes to high risk IP asset is where there's a condition being mentioned in the regulation. They say that if assets have been acquired, which was not created by the SSC by themselves, but has been acquired from the related person, or has been acquired from any other person to whom that funds has been given for research and development. And last point is that once from that assets, income has been earned either by sale of those assets, IP assets, or earning the income in the form of royalty or any license fee. So why the high risk IP asset has been identified separately, because in the regulation itself, if anyone is having any income with respect to high risk IP assets, then they straight away would be qualified for non-fulfillment of this regulation. Means straight away they will be termed as they have failed in this testing parameters of economic substance regulation. To justify that, they need to do some additional testing. So I think this is good.
Yeah. Thank you, Amit. Some other questions here. For offshore companies, do we still need to send ESR notifications for struck off, inactive or under liquidation companies? And then the second part to that is, under submission, who can certify that the company have successfully sent the necessary notification?
In this, Oliver, I just wanted to, before giving this answer, coming on to this answer, I just want to tell you what is economic substance, then everyone would be able to understand it better. Economic substance basically is a principle that gives the requirement to the businesses to demonstrate that their economic activity, their real economic activity, or I would say profit-making activity, must be within UAE. Plus, they need to justify that their presence in UAE is not only for taking the tax benefits from the tax treaty signed between the countries. So, if anyone look at these two aspects, then everyone will definitely be able to understand what the concept behind this. Definitely, double tax avoidance agreement have been signed, treaties have been signed between the countries, and to take the advantage. Yes, advantage need to be taken, it's fine, but undue advantage should not be taken. Now coming to the question, it says the offshore company, do the offshore company need to be need to this? Yes, every licensee in UAE need to comply with the regulation.
So to be clear then, for the both free zone and mainland companies are required to file ESR.
They need to comply. If there are certain free zones who are saying that all the entities in their free zone need to file the notification or do the compliance, but regulation speaks for if any entity, any licensee undertaking the relevant activity, then they need to do the compliances.
There's one question regarding regards to holding business and investment fund management. If the offshore entity does the online trading for securities such as shares, is that covered under holding business, investment fund management?
I'd like to answer this question. So basically for holding business, there is a very clear-cut definition being given that for holding company, the company needs to, needs to have a holding, needs to own the shares in another company, and the main activity is to, just earn the income by way of dividend or capital gain. So if this is the main primary activity of the company, then it would be considered under the holding business. However, there can be a company which has a license of holding business, but it is doing a Y activity, which is not apparently correct. So by virtue of that, they might need to disclose that they are holding company. However, they need to rectify the activities if they are engaged in some another activity being a holding company.
One question regarding the ownership. I would like to ask about the companies that are exempt from ESR. According to ESR law, if the company is owned by at least 51% government, is exempt from ESR. Is it only applied for Emirates government or also foreign government? And the second part to that is, if exempted, does the company still have to file a notification to the issuing authorities?
The answer would be the UAE government, and the answer would be yes. So if they are owned and operated and managed by the UAE government, even to some extent, then they will be exempt from the law. Otherwise, if they are owned by any other government outside UAE, then they will be, as part of the law, having to file the notification.
Is the license defined as a trade license or the commercial license?
It depends on which kind of company is it. It could be a trade license for some companies, a commercial license for others.
Okay, and one question, do we have any format for filing the notification?
Most of
yes, yeah, Della, you carry on.
Most of the authorities, especially the free zone authorities, have issued a notification form, which is more or less very similar in virtue, style, and design. The mainland has issued a way where you go on the portal and you answer a series of questions, you click, then you get onto the next page. Again, there's a series of questions, you click your answer, and then again you go forward until the form gets submitted. It's specific to each free zone, but they are more or less same in the free zones, the notification form.
Okay, is the economic substance reporting requirement and the country-by-country reporting requirement one and the same, or are they separate requirements?
Absolutely separate. Part of the same bigger picture, as I'm sure Amit can guide us very much more on, but they are absolutely separate for your knowledge, for the company's knowledge. Amit, would you like to shed a little light on how about this topic?
I would say the objectives both are being introduced from the action plans which is being published by OECD. Action 5, which calls for the avoidance of harmful tax practice 5, that has given us the economic substance regulation, and action 13 is the minimum requirement on transfer pricing and country by country reporting, that has given us the CBCR reporting. So I would say the objective is transparency of tax in both the cases, and it's a base, I would say, to regularize the tax practice in UAE. So both are different object, different procedure, but yes, overall broadly they are the part of the OECD action plan.
One or a couple of questions which will wrap under the date issue. So what is the period of reporting do we need to submit before the 30th of June? And then a subsequent one, we are located in Jebel Ali Free Zone and also an office in Abu Dhabi mainland. Do we have to submit the economic substance before June 2020? If the deadline is not given for us, can we submit the economic substance voluntarily?
For Jebel Ali Free Zone, recently they have issued a circular stating that for all the licensees, the last date is 30th June. So definitely, if they are being based in Jebel Ali Free Zone, they need to submit the notification by 30th June. And for Abu Dhabi also, like it depends where they are located. However, there is a broader guideline being given by Ministry of Finance, which states that all the companies needs to notify to the relevant authority about the conduct of the relevant activity by 30th June. So maximum it is 30th June. However, in Abu Dhabi, they can check in which free zone or where they are located. If they are in mainland, then 30th June deadline will be applicable to them.
We'll have a few more questions and then we'll wrap up. I know there's a lot of interest and everyone has quite unique questions to their particular scenario. We noticed that manufacturing business was not mentioned in the relevant activities. How does economic substance impact this business?
For manufacturing activities, see, there is a industrial license being issued by the authority. Apparently, it's not being covered under the relevant activities purview. However, having an industrial activity, there could be other associated activities also, like they are carrying out the trading activity, because if they are doing any manufacturing, they are allowed to do even, trading also. There are many companies which are trading under the industrial license. Also, there are companies which are providing the services. So we really need to see how they are conducting their overall business, or maybe they are into the lease finance business by providing the loans to any third party or any group company. So it really needs to be seen that, being an industrial manufacturing entity, what other activities they are being conducting, and accordingly we can issue an answer that are they into the relevant activity or not.
And here it is important to mention that one should not look after which industry they belongs to, or just look at the 9 broad relevant activities what they present. One needs to check all business transactions, because it is very critical. One cannot identify just looking at the name of the relevant activity whether they are doing it or not. So assessment is required. Oliver.
Sorry, we'll take a couple more questions and then we'll wrap up. What will be the procedure if an entity is not meeting the criteria for a relevant activity?
Currently, under the regulation, it's been given that if they're not conducting the relevant activity, then they do not need to do anything. However, we are advising everyone to submit a disclosure to the government stating they're not conducting the relevant activity, because this is the first time this regulation has been launched in this country, and the authorities are also expecting all the businesses to do their self-assessment, or to do the assessment of the businesses, and they come up with a conclusion that whether they're conducting the relevant activity or no, because there could be a chance that they miss to notify even in the case that they're conducting the relevant activity. So this time they should really take the initiative and notify the government that whether they're conducting the relevant activity or not conducting the relevant activity.
Okay, and the last question with regards to the submission to the authority, what type of annual reports do they need to submit?
There's an annual report that has to go once a year, every year. It will be at the time when your financial year. So some companies' year end is financial year December 2020. That is when they will have to submit their ESR report as well. Or some companies which have financial year ending March 2021, those companies will have to submit the ESR report on that time in March 2021. And as explained by Sakina, the different items that will be covered under the ESR report will be about the company, about their employees, about their expenses, about their assets, about their income generated, how it's being generated, outsource activities, and many further criteria.
Okay, I think in the interest of time, we'll have to close off the session now. First of all, thank you to the panelists for their expert opinions, and thank you to the audience for all of your questions. It's clearly an area which has generated a lot of interest. We will reach out to you all individually and follow up. As a firm, MBG Corporate Services will continue to offer webinars over the period of this pandemic and beyond to support your business both through this pandemic and beyond as well. So on behalf of MBG Corporate Services, thank you very much for your time today. I'll put a slide up now with our contact details. Do reach out to us as necessary, and have a good day ahead and a good weekend. Thank you.
Thank you.
Thank you.